Hi everyone, how's everyone doing today? Let's have a good day. I'm fine, thank you, Hammett. Thank you very much. Doing all right. Okay, let's get to the markets here. So we're threatening a trend break in Euro. The first hint was giving back 1220 right here. This little ascending triangle couldn't get through the bigger ascending triangle. Now threatening a trend break, which if you just take a measured move from this decline from here makes 110 viable, 109.80. New lows. It'd be enough just to take out this low, which was, what was it, 111.09. So I think we're headed to the 110 level. You know, we were talking about this all last week that actually all last week we were saying, why didn't the dollar get a bid? Well, it's certainly getting a bid here. And yen still doesn't look like the low's in. I think down here you'll see the final low in yields. So maybe around 108. I've had this line here for a while. And yields, I think, aren't far away now from taking out that 235 level on the 10-year. So I'm going to kind of use this for timing a potential yen buy. All right, so we're headed for a 3. You know, they don't always work, 3s. And, you know, I'm a team spirit guy. This comes in around 220. Look at this moving average on the weekly. So, you know, you're going to get, you know, huge bond bulls. Jamie last week talked about it. I think, you know, Greg has been talking about it happening. I think that's one last drop, and this is going to be a great short in the TLTs and bond market, and most likely buy in the yen. I'm joking about what, Nelson? Oh, the target in euro? I joke a lot in here, but when I'm going over the markets, what I'm attempting to do is satisfy the community with my views and the whys, etc. Not a trading messiah, just pretty good. All right, so that's my look here on the interest rates and US dollar yen. Something that could end up being a significant turn here is Euro Aussie up here. This is a weekly major resistance, but I had divergences. I did it this morning. I'm already out of my short. I said after I covered my short, it'll collapse. It's already what, another 10, 15 pips from where I covered. But you see this, sometimes 3 drives work, right? 1, 2, non-confirmation, 3, non-confirmation, 1 hour. That's a 1 hour. It was even more glaring on the 4. So this is pretty classic. This first high was a confirmed high or almost matched this, right? So if you can't eyeball it and see a glaring divergence and you have to check the number, like this number, to see if this took it out, then forget it. It's, you know, it's not even, when it's too close, it's not a high probability setup, okay? But look at this, on the second drive, you're already starting to get the separation. We had that pullback yesterday and a new high today and turned below 70. So I think this is saying that even with a bull move in the dollar, I think that's what, you know, maybe, you know, Greg was looking for another new high, 98.80, I believe. I remember what everyone's looking for. Sometimes I forget what I'm looking for. But if that's the case, Euro's more vulnerable on the downside, and maybe Aussie starts digging its heels in. But I tell you, the Aussie is a great story from yesterday. So yesterday, you know, call me a one-trick pony. I look for a lot of these 3 drives. You know what? If you find something that works for you and you're comfortable with, you know, if you're patient, you can just do that. So, you know, I'll go with the probabilities on this. So, you know, I had to try it. It was here. Aussie looked like we had a 3 drive here, so I tried it yesterday for a turnaround Tuesday. So to show you my team spirit, yeah, Clay looks like silver is on the verge of coming out of a wedge. After this, I'll show you. So, I talk about this during the opening of the show yesterday, 3 drives, diverging, all this stuff. And then after the session, I see blogs flying around about, short the Aussie, major weekly breakdown. I look at the chart of the day. It's the breakdown in the Aussie under 60, which we couldn't penetrate yesterday on any bounce. This breakdown, okay, I think it was a daily they showed. Great chart of the day. Anyway, so it saved me money because I stayed with it, but then all that stuff I saw from the team who, I was a great contrarian indicator yesterday in Aussie because, they didn't just say, well, I think it's going lower. They're publishing blogs and, screaming bears. And, I got out. Once it took out the wedge line, I got out of the way. All right. Anyway, happy to be a contrarian indicator for all you guys out there. You could fade me once in a while. Don't do it all the time. That's all I could say. Anyway, great call on the Aussie, and glad to be of service as a contrarian indicator for ForexAnalytix. And there are a lot of people in here, in this team, that you do not want to fade. This guy, don't fade him. This guy, don't fade him. I'm not saying they're always right, but they have very good hit rates. Don't fade them. No, not a high percentage fade here either. Well, let me see. Oh, there he is. Fade him. I don't know. Maybe half the time. I haven't seen enough of Joe's trades, but Joe is really a pro. Oh, yeah. Don't fade Paulie. Don't fade her. No way, man. He's been cable bearish for a long time, helping people in the chat room. Andre's great, man. Don't fade him. I don't like to be on the other side of the trade. Anyway, so you have a lot of great research from guys with good hit rates. If you have a better one, yeah, I guess you don't need it. But if you do not, good idea to sign up. At least a trial. We had someone sign up live during the webinar yesterday, and a few others followed him. Said they like what we do here for free. You guys like what we do here for free? Anyone want a refund from the face webinar? Okay, that's what I thought. Okay. All right, listen. I'm going to turn it over to the pros. Let's see, if you're looking for something to fade me on today, maybe it's this. So, I mean, the S&Ps are under a lot of pressure, and I'm trying crude one more time from the long side from yesterday. I'm down about 24 pips, risking, I don't know, 60-20. I'm down 25 here. So everything's going to boil down to, in the S&Ps, are we just going to puke to new lows? Or I'm thinking we get a pullback in here, and then we get, my dangerous Elliott analysis, don't pay attention to it. We get a higher low, and then one more attempt up towards 28.70. We'll see if crude could do that. Okay, Blake, how are you today, partner?
Good, Coach. Yeah. Good to be here. I'm gonna go over something I just tweeted, and I'm gonna talk about that for a second. But what I want to discuss is actually another topic. One of our traders, he came in. He's been with us for the last few months. He's like, man, and we hadn't heard from him in a while. And he's like, hey, I've been getting killed in this market. What's going on? And I'm gonna talk about the FX market really quick. And we have been really low volatility as of late. Everybody knows the volatility in the FX market has been really, it's just been really crappy. Now, considering the what we've seen in the in equities and the volatility we've seen pick up in equities, it hasn't really translated to the FX market yet. Now, we have seen some of these yen pairs, like the Aussie yens, come off quite a bit. The Kiwi yen, dollar yen, but when you take like the euro dollar still stuck in some tight ranges, and the cable has been bouncing around as well, but mostly it's been in the yen pairs. And if you have not been trading the yen pairs specifically, you're probably just getting whipped around in most of the other dollar pairs. The dollar has just been very choppy. I mean, look at the dollar. I mean, we hit new highs and we came off again, then we're bouncing back. It's like, are we going to break out? Are we not? One point I want to make, and this is not only a comment to Brad, which I already said my piece in the ForexAnalytix chat room. And by the way, here I'm going to put you guys up on the chat right here if you guys are on Jumbotron right now, so you guys can say hi. And I'll leave it up here for a second. You can see all the people that are chatting in here right now. There's probably about 100 of us. Yeah, about 100 of us in there right now. And you can, you guys are on Jumbotron. Just there's Brad right there. And I'll let you guys goof off a little bit.
Hey, Blake, do you wear your shades in the chat room?
I don't. There's funny. She was just saying something like, "Who's the guy with the sunglasses on?" And that's me. But at the time that we made these photos, because we made these little caricatures of all of us, because thought it'd be a little different, unique. It was actually the only high resolution picture I had on my computer at that moment. Was one at me and it was a wedding in San Diego, of all places. Close to where you live. We were out on the water on a boat.
Nice.
My best friend's wedding, actually. I was best man anyway. I had a picture of me with sunglasses on. I'm like, okay, well, I'll just have to use that high resolution pic, because that's all I had, and I just never replaced it. But anyway,
I thought you went Hollywood on us, bro.
No.
Right.
But anyway, what I was telling the guys in the chat right now, and and by the way, if you can see where everybody's saying hello and hi and all that stuff, but if you go to you can search messages. You can actually look at all the different charts that we've been posting. Like what ones that Amanda posted this morning, and comments regarding that particular chart, or Olivier. So it's not just all comments like this, but what I was talking about a little bit earlier, and I'm going to get rid of this, is this market's been, the volatility has been very low, so you can't afford to get into a position and you can't stick around for a long period of time. If you're wrong, you got to be wrong quick. And I'm always in the camp of it's okay to be wrong. It's not okay to stay wrong, and especially in this market, this is not a market where you can just get on the wrong side and just hope it comes back. When you have a lot of volatility in the markets, when volatility is increased in the markets, it's easier to sit around in a losing trade a little longer. You have wider stops, because with volatility means that the market's market could bounce back on you and give you that opportunity to get out with a minimal loss or maybe even a small gain. But when volatility is very low, you can't stick around in a trade too long. So what I mean by that is I keep my stops relatively tight, and I take profits really quick too. That is a product of this market. I'm a product of the current market environment. When the market gives us better developed trends, especially in the dollar, and the dollar is usually my proxy for, like, you know, when a good trend is being developed, because when you're trading predominantly dollar related pairs like the euro dollar, the Aussie dollar, or the cable, whatever, when you have a good move in the dollar index, it's easier to trade those majors. And like I said, you can get into a trade and have a little bit wider stops, and if it doesn't work out for you because of the volatility, it can swing back on you and give you an opportunity to exit with a decent, you know, decent profit, or maybe even manage your loss a little bit better. But when volatility is as low as it is in the FX market, you can't stick around in a losing trade. You just cannot, because it makes it impossible to dig yourself out when volatility is low. Like I said, it's easy to sit around and take a bigger loss. It's not as easy to make it back. So volatility will pick up again. I guarantee you. I guarantee it will. It's the markets are very cyclical. So right now you have to be a product of that environment and just take losses quickly, take profits quickly. I'm doing a lot more scalping right now than I've done in years past, but that's okay. You know, pretty soon, you know, whether it's a week from now, or, you know, 10 weeks from now, or, you know, or 20 weeks from now, I'll be taking positions, putting in wider stops, and looking for, you know, the euro to go from 112 to 114 or 112 to 109. It will happen. It's just right now you can't sit around in a losing trade and expect to make that money back in this environment. So with that being said, just I want to point that out, because I don't we shouldn't ever hear I got killed in a trade. I just never want to hear those words, because that means that you're just not managing your risk very well. It's okay to be in a few, you know, you get in some trades and you're like, oh, I took 4 losses in a row. Then at that point you need to take a step back and say, okay, let's, you know, be a little bit more patient about my entries. That's fine. And that happens to me. Believe me. It's I get in situations where I'm like, man, I cannot get anything straight. And then if that's the case, I usually take a step back and say, all right, I'm waiting for the perfect setup, which in essence, you should be waiting for the perfect setup at every trade. But you know as well as I do, that's easier said than done. You know, you get into a trade, or let's say you make a few positive trades, and you start being a little bit more lax in your entries because you got some profits to trade with. It's a natural evolution as you're trading. It's like, you know, you're like, man, I can't be wrong, and then next thing you know, you're smacked down with like several losing trades in a row, and that's usually because you've loosened your criteria for your setup. And look, we all are human beings, and you know, I wish I was my best trader self at all times. I wish I was. I'm not, and because I am human. Like I said, I'll take a few trades. I'll get every one of them right, and then all of a sudden, whether I know it or not, at that point I start being a little bit more lax. Start being a little bit more loose in my rules of entry, and then next thing you know, I get smacked around a little bit because I think I'm king of the world, and then, you know, I have to. The market basically has to, you know, reset me a little bit, and then I have to, you know, tighten up my rules, and then I get good again, as long as I don't let it go too long. And that's I think the key to me versus maybe, you know, and again, I have to reiterate, I trade for a living, guys. You know, ForexAnalytix is and was built more to build a community and to build a a community for our traders, but I make my bread and butter from trading. And I trade for Gelos Capital, and I've been trading for the same, partner of Gelos Capital for the last 3 years. And I have to perform. There's no being able to trade for them and not performing. Does that make sense? Like, if I didn't perform, I would not have a job. So but the reason why I can perform is because I cut myself off pretty quickly when I realize that I'm being very lackadaisical in my trading. And then I tighten up my rules for entry, and then I continue to forge forward. So just understand that. But maybe my ability to recognize my weaknesses quicker than you on average, I'm not saying you in particular, I'm talking about the average trader, is probably what helps me out more than the average trader, because I realized quickly that I'm being a little loose here, and I need to tighten up my criteria once again. All right, so anyway, I just wanted to talk about that because I think it's important, especially in this environment. And let me know, for those of you at home and you're listening in, does what I say make sense to you? Does that all make sense to what I'm saying? Because again, I do this for a living. I do this for a living, and I've been there, I've done that. Whatever you're going through, I've been there at least 100 times, because I've been doing this for almost 25 years. I started trading in 1996. So
Rookie.
Yeah, I am a rookie compared to the dinosaur, but yeah,
All right, great straightman. I'm your Ed McMahon, Johnny.
All right, it looks like everybody's understands that you understands what we're going through here, and it's not there's not a I always love it when people go the quote unquote pros, or trading demigods, or whatever they want to be. It's like there's always a there's always a simple solution. Just follow AB equals CD, and then you get Y result all the time. That's not always the case. It's we're humans, and so it really comes down to being disciplined and understanding, what your points of entry are, and what your rules for entry are. And what I do, I always like to express the fact that what I do is not necessarily what I do well, or the rules that I use don't necessarily translate to you. We're all different. Every single one of us, the way we trade the markets, the time we can put in front of the computer. I can sit here and manage my trades, 10, 12, 15 hours a day. You may not have that ability. I'm pretty quick at, responding to what I see in the market. You may not be. You may be a little bit quicker. And that's what makes some people so good at trading both sides of the market, where I'm kind of slow to that. I have to be kind of directional. It's like, okay, I want to be short the dollar yen. For example, I covered up my dollar yen short again. I've shorted it twice in the last 3 days. Yes, I have a pattern in play in the dollar yen, which you can see it's valid here, and I'm still bearish the dollar yen. Does that mean I'm gonna just get short and stay short? No, I've been short twice. I actually shorted it here. I shorted it overnight, and I closed out this morning. And guess what? If we get a move back up to the 50s, I'm going to short it again. So I'm directionally.
You like to milk the cow, bro.
Yeah, because I'm directionally. I think the dollar yen's going lower. It just doesn't mean that I'm going to sit in a short trade and just hold on to it. I am quick to take some profits. I'm looking for entries again, and I'll look to get back in. Anyway.
What you said also lines up with what Schwager said during the interview. My question was, what's the most important advice you could give traders? And, he's interviewed quite a few, and very good ones. And he said, find a trading style that suits your personality. Exactly what you've been talking about.
Yeah, and Jack Schwager, by the way, who is interviewed, and if you've never read the Market Wizards book, you always get the original one. I've read I think he has 3. I've read 2. And I've never, I think if he has a third, I had never even ventured
No,
into that
just
one.
two.
Just two. Okay, so
Yeah.
the original Market Wizards is probably my very first. Well, it was. I had that and a Mark Douglas book that was given to me in the '90s.
Trading in the Zone.
Trading in the Zone was the original, and from the late Mark Douglas, and those are the two books that I read first when I first started trading, and it didn't make a whole lot of sense to me. Yeah, but then you read the Market Wizards book over and over and over again, and what you're going to realize is everybody what they're going through, those traders, they're the same things that we go through every single day, despite the differences in the markets that we're dealing with. The behavior as traders doesn't change. So,
and the decimal points, even though they're much larger, it's the same.
oh, it is the same. Yeah. What you deal with is what I deal with the same issues now, trading about, I don't know, I would say on average 30 to 60 times the size that I used to trade for myself. On an individual basis, I still deal with the same crap. I still deal with the same, issues. It's not like it's changed. It's not like, oh, Blake, you're trading a much bigger account and you're taking much bigger positions, and what
Should be easier, bro.
What was a $300 loss is a $30,000 loss. It's the same crap. I still deal with the same like I still deal with the same sleeplessness or the same, sweaty palms, whether I was, trading $300 or losing $300 or losing 30 grand. It doesn't really matter to me. It really doesn't. It's all the same stuff. So anyway, I hope, again,
nice coaching today, bro.
Hey, thanks. Okay, so one thing, I did go long some Aussie yen, and and this is the trade I'm gonna give you for right now. And my stops, believe it or not, I could probably move my stops to break even. I have an 8 pip stop loss. That means my threshold for pain in this particular trade is 0 to none, basically. And am I looking for a lot of money? No, I'm looking for a move back up to 76. I got a divergent relative strength. We're hitting a big fib level, and we've been, I'm just looking for, maybe a move back up towards the channel resistance at most, but realistically, I'm, looking for a lot less than that. So, I mean, you're dealing with a down channel, you're hitting a fib level, we might bounce back to 76 and then I'll get out of it. And look, if I can risk, 7 or 8 pips to make 40, I'll do it. Especially because I was short dollar yen overnight. I made, 30 pips being short. I've got a little bit of profits to deal with, to sit on, to give back. So I'm willing to take that trade. And that's a lot of what I do, especially if I'm going to go counter trend, has more to do with how profitable I am currently. If I'm, and by the way, I think we have data coming out. Let me make sure. Yes, we have
retail sales, core CPI.
God, we got a lot of crap. Okay, Steve, you know what? I'm gonna stick around with you guys through this data. So we have. Let's do this. Let's go to our.
You have to refresh the page, and it's become a pop-up.
Yeah, it's become a pop-up. Refresh the page, and do you see that it says pop-up blocked?
Just above your avatar. Go to your avatar. Go to the top. There's a little window with a red little squiggly.
Yeah. Click on it. Always allow.
Okay, so always allow pop-ups and redirects from.
Okay, now go to.
So you guys got to hit that too.
Yeah, click done. Now go to calendar. Go to calendar. Go open data flash from the next time. You won't have to do that. It's going to do it on its own.
Okay, so here comes all the data. Hold on. Let me go. Dang it. Okay. Here, let me move that for a second. Look at that. Steve, you guys, you and your tech team did some pretty good stuff over here. All right, here. Okay, so here we go. Heads up, guys.
10 seconds before the release.
That was a good number. Dollar yen's getting hit a little bit. Retail sales came in
retail
weak.
sales.
Oh, that's not a good
Very
number.
weak.
Oh, revisions are higher, it's marginally higher. Yeah.
Yeah, so dollar yen's coming under some pressure here. So you see dollar yen's under a little bit of pressure.
S&Ps too.
S&P is coming in. Yeah. Let's see. Euro bouncing just a bit. Cable bouncing just a bit after getting smashed. Aussie's holding up. Kiwi's holding up. We had some Canadian data come in. Very, very volatile there. Dollar yen is continuing to be weak. All right. Well, then I think we got to keep an eye on this dollar, because the euro, and by the way, I'll just go over this and then I'm going to pass it over to my colleagues here. The euro dollar broke through some support, probably cleared out a lot of stops down here. So, you know, be careful now that we've pushed some of these stops. You notice we're not making an hourly, at least if we hold this hourly low, we're not making a new low hourly here. So be careful with that. You know, if we start to bounce and we get back above 112, I would assume there's going to be some stops right back above here from anybody who was short intraday. So anyway, just my 2 cents. That's cool. We got the data flash. It's a pop out. That's a new feature. And I'm sure, Steve, you're going to talk a little bit about that. Guys and gals, I'm going to pass it over to my colleagues here, and then I'm going to get to back to the trading the markets. So Steve, Stelios, Coach, have a great one. And Coach, have a good interview with
Saeed.
Saeed. Yeah, he's good to listen to.
Yeah.
All right.
Okay, guys.
right.
Good luck today, Blake. Hey,
Thanks,
Blake,
guys.
I'm calling AAA right now to help me get one of my legs out of the tar pit.
Okay, we'll do. That sounds good. Good. You might need more than just AAA. You might just need to take the leg off. All right. See ya.
Bye, Blake.
Got to come
Bye,
back.
Blake. Okay.
Always a
So still-
comeback. All right.
Yes.
Hey,
Not
guys.
that much to say actually today. We
Coach.
obviously had the US data just now. We went through that. We had the Euro and German GDP smack in line with expectations. We had an interesting comment just a few minutes ago, I think, from in the UK, the Labour Party spokesman. I put it in the chat as well, in the chat room. Labour Party spokesman said, and I quote, "We have serious concerns about negotiating with a government that is in the process of disintegrating." So I don't know how the talks between Labour and Conservatives are going to go, but the pound is not liking that. Cable has been dropping, so the uncertainty there continues for yet more days and weeks.
What a surprise.
Yes, but the interesting thing, which I think happened early today, is that we had some numbers out of China, which was industrial production, retail sales. They all missed, and the
market didn't like that.
Yeah, they missed quite considerably. And you know what's going to happen here? We have the trade tariffs coming in. We have data softening up. So it's almost inevitable that the Chinese are going to continue with the easing policy and or reinitiate, easing policy. And that's what I think Donald Trump said preemptively a couple of days ago. He said that the Chinese are going to have to put more monetary stimulus, and the Fed will have to match that. And if the Fed matches that, then we win. That's what Trump said. But I think it's becoming obvious to most people that the Chinese will have to add more stimulus because yes, the economy is growing at compared to the US or UK or the Eurozone, it's growing at a much higher pace. But it started, first of all, I don't know how much we can trust these numbers, but also these numbers.
Who knows what is the actual pace? Because
yes.
It's suspiciously stable for so many years and suspiciously always within what they expect. And we've had periods of time that we've had huge divergences between data that are very highly correlated to GDP and the announced GDP. So I would be very, very, very skeptical.
Yeah, they put a target of 6%, whatever it is, and lo and behold, they're very, very close. Yes. So that's something that should worry us a little bit that more monetary stimulus is coming, and if it comes from China, well, then the Fed can't be. They already hiked so many times, and they're already ahead of the other major economies. They just cannot tighten. I mean, or even be neutral if everybody else is easing. Just my view. So that for me was the important data of today, the Chinese data. And
yeah, we're always looking for an excuse to ease.
Yes, exactly, and for rates to go lower, and for same old story. Anything to support the equity markets.
Rates are going lower. Speaking of which, I mean,
Yes.
Kostas was mentioning that, and I seriously intended to show bonds today simply because
Yes.
we expected this move for the bond. The bond was consolidating after, I said it a long time ago. This was a major breakout here in the bonds after a multi-year correction in this descending channel. We got a breakout, and you don't want to fade this kind of moves. RSI was confirming the breakup of this rectangle, so that means that bonds approaching all-time highs, which obviously has the equivalent implications for rates on the opposite side, of course. Treasury is also recovering. The Treasury yield, the 10-year yield, approaching the recent low at 234.50. So still your yields anyhow are doing their move. Of course, having to do with US yields, after the hikes you mentioned, we're still far away from the historical lows, but the same is not true for the bonds.
Yes. In the US, we have a Fed funded rate at 250, and the 10-year rate is now inverted, so 230, whatever it is.
Yeah, which is never a good sign.
No, 9 times out of 10 is a very bad sign.
Yeah, but it usually lags. I mean, after the yield curve gets inverted, you might have a lag of a few months, a year, or whatever until you see a recession. But more or less, it's inevitable. I don't think we ever had an incident that that didn't lead. That wasn't actually an initial indicator for a recession.
We'll have to research that. Yeah, I don't think so, but we'll have to check.
Yeah. Okay. Anything else that we had, Celia, before we go to the charts?
Nope. Well done with the data flash. It's a really great tool. Great job, man.
Yeah. Thank you. It is nice. It is very nice. I think it was something that really was missing to enhance the experience with the platform. It makes it a lot more alive. Okay, perfect. So let's go through the questions. By the way, we had a question about the VIX, and we can definitely start with the indices. Speaking of which, we can start by speaking about the VIX. If you remember, I mentioned the other day that I think that now that the genie is out of the bottle, by saying this, I mean now that we've broken above this descending trend line, I think that we can easily push this horizontal support resistance area to 26. So I do think that the VIX can easily produce more upside. Of course, that would mean expecting more downside for the indices. Indices, as I showed yesterday, found support, at least the major ones found support at quite interesting support areas, so not at random areas. S&P found support at this well-defined horizontal support resistance area. The Nasdaq, exactly the same deal as you see here, but in both cases, we have not retraced enough to satisfy the technical requirement on what should happen after breaking below an ascending wedge, which is to retrace the full height of the wedge, right? So we have some distance to that. Now, the DAX also at a very interesting area. As you see, it's still riding this channels support and the 50 daily moving average, just very slightly below the 11,800 area. We know how key this area has been, both as support and resistance in the past. So obviously, big technical damage will have been done if we break below that. The Nikkei was the first one that had snapped by breaking below this channel. Not a surprise there. The yen responds to this kind of moves, and the yen is near the lows. I'm going to show it in a while. Trying to hold this 21,000 area, the Nikkei I'm talking about now still, but doesn't look very likely to me. I think that we're going to keep on moving lower. And here is the USD yen, which is attempting to move lower than the previous lows. Still an inside day, but near the lows. Now, keep in mind, none of that really matters in the grand scheme of things, because the big formation to focus on here is this huge multi-year symmetrical triangle, and its support currently passes from 108.20. So even a move another 100 pips to the downside to 108.20, it's going to be a nice move, but still doesn't really turn medium to long term bearish the USD yen. But a break below that trend line is going to be a huge, very significant technical event, and I think that it's going to get the market really, really moving. So anything can happen between these two lines, but once we break either of them, things start getting really serious, and I do think that there's going to be continuation, and there's going to be pickup in momentum, and that's going to be probably a very interesting trade. Now, the dollar, speaking about the dollar index, and then we can speak about significant, about the major pairs that actually consist the basket, because the DXY is a basket actually of currencies. The DXY remains quite well bid, as you see. I mean, we did have this, let's call it a false break higher, although as I've explained since the first days, I don't want to call it a false break higher, because for it to be a false break higher, you need to have some kind of a technical event that would tell you that this was indeed a false break higher, because now you're breaking down. But nothing like that has been happening, right? So we've pulled back from the highs, but we definitely haven't gained any momentum to the downside, which means that you need to respect the fact that the DXY remains in an uptrend, easily recognizable by the fact that we've had a series of higher lows since the very beginning of 2018, right? So it's like now it's been 17 months, 16, 17 months, almost in this uptrend. So, you need to keep respecting it. We haven't really broken any trend line to the downside. So that means that the USD can remain well bid, right? The next target is a retest of this ascending channel, which of course, since it's ascending, for every day that passes, we find resistance a little bit higher. Resistance currently passing from 98.30. Now, if you remember, I was quite adamant last week that I don't want to even think about trading the euro to the upside as long as we hold below 113. A break above 113 could have made a difference, could have an impact from a technical perspective, because a lot of people would look at this chart and say, oh, perhaps we're breaking above a descending wedge, and 113 is also horizontal support resistance area, and then we might have had some people buying it, some people covering their shorts, which would cause more movement to the upside. But as you see, nothing like that has happened, which means that you either remain short if you have like a short position, or do nothing with it. And I think that remains the case here. Now, what has been reacting a lot stronger to the downside, mostly for political reasons as well, is the pound, which again, a very erratic price action. It broke above this descending trend line. The only reason I didn't actually buy that breakout was I've been away from the Euro USD and the pound for so long, and the cable for so long, due to the price action being completely appalling, that I wanted to be more cautious. I have other exposure, other positions, So I didn't end up buying it, which is a good thing, because after we got like a nice continuation higher here, we've only had down days since then. And, you know, it is what it is. Now, does this mean that it's breaking down? No, because, you know, I'm monitoring this descending channel. We're now retesting its support also the 50% fib from this move higher. Would that mean that I will be buying it? No, I'm gonna still, you know, remain outside of this market and just monitoring what it's doing. I think there are better opportunities out there than getting involved with something as choppy as the cable or as boring as the Euro USD. I just know that people want to see what's happening there. Some people, you know, because they're very liquid currencies, just insist on trading them. So I'm just, you know, showing you what I see. Now, having to do with crude, very interestingly, we seem to have like a big, nice continuation candle on Friday, but you know there was no continuation. So you know, excluding Friday, what has been happening with crude is that we have been consolidating in this tight triangle. That would make me favor a continuation to the downside, which is a good thing because I still hold 2/3 of my initial short position. So you know, that would be great if we see it happen. But you know, it can go either way. I favor the downside, not because I have a position, because you know we're consolidating after a first leg lower, simply just because of that. So 58, I think, is very doable if that's the case. So I'll keep monitoring this ascending trend line support, and if we break below it, I'm going to be feeling quite happy with it because I'm going to be quite confident that there is more downside to come. Now, gold, as you know, those of you that are ForexAnalytix members, I've switched my remaining short position to a long position actually. Gold is still toying with this 1300 level, but if you look at it on the 4-hour chart, I think that on a 4-hour chart it looks a lot more bullish because I was monitoring this descending wedge. You can view it as a pennant here. You can see like a nice pennant. We broke above it. Little consolidation looks bullish to me. So you know, I bought the retest of the support, and I do think that there is a decent chance that we're going to see a move higher. 1310 is a first very conservative target, which is this previous high. But I do think that if we actually start moving higher, we're going to make it higher than 1310. 1323 is the next target that I have, you know, in scope. Situation with silver, more or less the same. You can view it as a, you know, descending wedge. We're flirting with breaking out, but definitely underperforming gold. You can also see that clearly on a gold-silver ratio. So, you know, quite simply, if you like to be long one of those two metals, I think you should go with gold. If you're looking to be short one of those two metals, I think you should go with silver. Now, copper still underperforming. This looks on the 4-hour chart like another short-term bearish consolidation. You know, given the situation with China, etc., it makes sense that you should expect more continuation lower. So lower it is. The path of least resistance, I mean, remains to the downside. As simple as that. Steve, at some point, would show how to get the data flash one more time, please. Yeah, Amir.
I did that already in the chat room. I did that already.
Okay, okay.
But if you want to show it again, you can show it.
Yeah, we now made it, you know, for various different reasons. We made it, one of those reasons being the fact that we don't want you to just be stuck in a specific tab here in the tools. We made it a retractable window. So once you log in, you log out and you log in, you have to keep in mind that your browser will initially, as it does with every site, block the pop-up window. So you're going to have some kind of a notification here you need to tell your browser to allow ForexAnalytix to give you pop-up windows. And once you do that, you can go to calendar and initiate it from here, and then it's going to open it. And if you leave this checked in, that means that from that point on, every time you log in, Data Flash would be opening on a separate window. If you close that, Data Flash will not be opening on a separate window automatically, but you will always have the ability to launch it by clicking on this button that's under calendar. Okay, I remind you.
Great engineering.
So, yeah, I think it will do a good job. And for people that use multiple screens, it's also nice because you might want to move it, somewhere else to always have it in view, because it's very prompt. It's extremely fast. It gives you data and information immediately. So I think it's a nice little tool.
Steve, I was just thinking about you're showing gold and showing copper. And, my expression is gold is about destruction, debt destruction, currency destruction. And copper is about construction, the building of things, and economically sensitive. Interesting, they're moving in opposite directions, maybe foreshadowing of what's going on here. So,
yeah, it's not a surprise that they're inversely correlated at the moment, given, the fundamental.
That was one of my best calls of the quarter, was being bearish copper. I said I said that copper, Dr. Copper, was being sued for malpractice from impersonating a bull market.
The technicals were also flashing red signals because at the very least they were telling you that you shouldn't be long, because we kept saying it. The fact that it had a nice bullish formation, but made so many attempts to break out and failed in every single attempt, was worrying. I mean, I was long at some point and I stopped being long simply because, a market that fails to break out in one direction after so many attempts at some point becomes very vulnerable to reversing and turning to the other direction. Now, I could have reversed my position as I did with gold. Unfortunately, I didn't. I didn't take that decision. I just,
can't be everywhere all the time.
Oh yeah, no regrets. I mean, sometimes we take, we take good decisions for very little reason. Sometimes we.
What would you say would be the most positions that you have on at any one time, Steve?
Oh, it has happened some few times that I've had like 8, 9, 10 positions, but that's
that would make my head explode. I have a hard time having more than a couple on.
Yeah, but I would never have.
As Blake said, I'm a dinosaur.
I would never have so many positions. It has happened for me to have that many positions only by accumulating them slowly and those working out. So maintaining then positions that have been going in your direction is a very easy task to do. You just,
that's true.
Trail a stop loss, you take some partial profits, and then you don't really need. Then you don't.
But again, that's your personality too. For me, even if they were working, it would still be overwhelming. Do you know what I mean?
Oh, yeah, it's not something
just monitoring and managing them and everything.
Oh, it's not something I do as a standard practice, but it has happened. You know what I mean? Yeah. On average, I rarely have more than 3 to 5 positions.
Okay. All right, buddy. Thank you.
Yeah, my pleasure. So Chad is saying that it doesn't have sound. Okay, let me tell you 2 things if you don't have sound. First of all, make sure that, let me show you, Chad. First of all, make sure if you click here on any browser on our site as well, do you see here on your browser? Make sure that sound is on or automatic or whatever. Same with the separate window that you have about Data Flash. Okay, so click here, make sure that sound is on. Then click on this little speaker and you can see if everything is selected having to do with sound in Data Flash. Okay, so might be the case that you've just blocked sound, on the website or on this little pop-up. So, just by clicking that, you can verify. Now, if it still doesn't work, then I would use a different browser just to verify that it's not browser specific. And once you've done that, just open intercom and contact our customer and tech support. They're gonna be very helpful with that. Okay. My pleasure. So let's see. How about Bund and then? Yeah, oh yeah, we covered that. Costa. Okay, let me see what I didn't cover. Yeah, let me continue with the metals, by the way. Platinum and palladium. Palladium failed to break out from a retest of this, little channel, you can call it a flag or whatever. So, we can keep moving lower. So, I'm quite happy with that. And platinum, if you remember when we broke below 875, I was very clear that 875 should be resistance from that point on, and that's the case. So keep looking lower. As long as we trade below 875, the path of least resistance remains to the downside. Now, keep in mind that the USD Chinese yuan remains on a very critical confluence of resistances, but the price action tells me that it wants to move higher. So I would be very, very skeptical and very, very careful in trying to fade this move higher here. I know we're on a resistance, and sometimes that's just, when a market is very strong or very weak, depends. Sometimes, a good confluence of resistances and the good confluence of supports, it's just enough to stall the market for a short period of time, which has already happened here. Okay, so we've already stalled for a couple of days here. But the fact that we find it, impossible to retrace is telling me that the chances of a continuation higher are very, very significant. So I would be very, very careful, as I said, trying to fade that. Now, let's go to Aussie. By the way, let me also say, several hours ago, we uploaded a new post. You can go to ForexAnalytix, to our blog, which by the way is free, and which by the way for some reason doesn't want to open at the moment. Yep, there it is. And you'll see, here it is, US-China trade deal breakdown and market implications. So I think you're going to see, you're going to find quite a lot of stuff here about, markets that are affected by what's been happening with the US-China deal. So I strongly suggest you have a look at it. Now, going back to the Aussie USD, Aussie USD has clearly broken this triangle, and that's definitely a bearish development. Next support, as you see, is down here, just above 68 cents. So as long as we remain below 70.2 cents, I think that there's not much to discuss. The path of least resistance is lower. Kiwi made the move lower quite some time ago by breaking below this triangle. Now, as I was saying, there was a little chance that we could move higher if we held this as like a descending wedge, but we seem to be breaking lower, and if that's the case, then you should expect 64.25 to be tested, which is the next downside resistance. Aussie yen breaking one support area after the next, 61.8 at 74.45, the next area of interest. And the Kiwi yen, most importantly, in my opinion, and I say most importantly because I had mentioned multiple times the importance of this horizontal support area in the Kiwi yen. It was tested, it had been tested by the market once, twice, 3 times, 4 times, 5 times, 6 times, because it took 3 days of having stalled here before we finally broke lower. So I think that you should take very seriously this breakdown, and I think that this opens the door for a move lower towards the flash crash low, which is at 69.40. Okay. Have any questions I haven't covered? Nope, I think we've covered everything. Coach,
Yeah, buddy.
if your guest is here, we're at the top of the hour anyhow. I think we covered what was asked and what was important. So go ahead.
Great job, bro. All right. Thank you, Steve.
Thank you.
Okay, everyone. Here's Saeed. I know a lot of people are here for Saeed. I don't blame you. Saeed, I'm making you the presenter right now. Looking forward to our conversation today, my trading warrior brother. Hello, Trader 1SC. Waiting to, maybe I have to unmute you. Let's see.
Can you see my screen?
No, we
Yeah,
got your
here's them.
screen. Got your
Yeah.
screen and hear you. How are you, buddy? Had you. We had your screen too. There we go.
I'm all good, thank you. How are you?
Good. Great to have you back, Saeed. And I just want to congratulate you. Last time you were on, you were very constructive S&Ps.
I think
There was that little jiggle, but it was a melt up.
1 second. My audio's missed. I can't hear you.
Okay. How about now?
Oh, no, that's better. That's my volume. I had it on YouTube for some reason.
Oh, okay. Don't mute me. I have to ask you questions, but
Okay.
I was acknowledging your bullish view on the S&Ps before the melt up that we had from in March to recent highs. So, great call on being constructive. The market. There were a lot of bears like me thinking, it was close to over. So nice call. So
Yeah.
what?
Lucky.
Yeah. Oh, yeah. I know. Yeah. Broken clock. So. What's on the radar here, buddy? You go wherever you have conviction.
Okay, so it's been one of those weeks where last week and this week's where it's not been easy. Like I've had swing trade ideas, but like they've ended up being day trades, and I had to cut them short, and it's not been the easiest time in the market for me personally. But there's a few that are standing out to me, and again, one is the S&P. So I'll start with this. So let me just get that pen tool
Okay.
you've got here. Yep. So what I'm looking at is oh shit, how do I get rid of this? I shouldn't have got it. 1 second. So if we look right, so on a monthly basis, okay,
Yeah.
month is looking pretty bearish, okay.
Yeah.
It is looking pretty bearish. So, but it is at the key support as well. So what
Right.
do I do from here? So sometimes if I look at a month, I got a clear buyer's gate in the sense where I got a clear target to reach for. In this case, I don't have a clear target to reach for. So I say to myself, okay, let me go down to another time frame to see if it makes it easier. So on the weekly, we can see this is what stands out to me, this high here. Okay, so
Okay.
this is the high that stands out to me. And then when we made a clean break above it, we found support there. So and then when we made a clean break below it, okay, big sell-off.
Right.
Again, what happened again? Clean break above in the weekly,
Right.
hold the support there. So naturally, if he's gonna follow this pattern where we also took our all-time high as well. So if it's gonna make a break below here, it's bearish. But I'm not convinced yet because I believe the two levels we're keenly trapped within. It's gonna be this blue level and this black
Got
line.
it. All right. Would you sell a rally back up to the blue line and probe it, or you're going to wait for confirmation for it to be rejected from there and then take out this candle?
Okay, for me to have full confidence and put full risk behind the trade, either it makes a clean break below this black line,
Okay.
or this blue line. This area is, for now, I'm still considering as a range bound environment until proven otherwise. So what I'm gonna do then is go back to whenever I use GoToMeeting, right, it's so much easier with the do you know how to delete this? I'm not trying to delete these arrows. Can you guys see these
Yeah. We see everything. What are you trying to get rid of?
Yeah, I'm trying to get rid of them, but I don't have an eraser tool
That's
here.
all right. It looks like when you have a child, you'll see artwork like this.
Okay. There we go.
Are you married?
Come on.
Oh, you are. You're married to the markets.
Yes, that's
All
it.
right, go. All right, that's a tough mistress, buddy. Go ahead.
Let's carry on. So on the daily, things are more clearer, and this is where I'm getting here. From here, I'm getting actually a short-term bullish bias. This is short-term anyway. It's got more to go for confirmation, but that was the high that caused that low. So I said, okay, what proves it further that this level is pivotal? There's the resistance.
Yeah.
Resistance. You know, break above it, deviates a bit below it. As soon as it closes back above it, it shoots up. So I know this is a key pivotal level. We're back there again. When it comes here, I'm going to be looking for bullish patterns or entries. So in this case, what I was looking at is
getting it today.
Exactly. So what happened was,
yeah, go ahead.
What happened was I took a long initially, not yesterday, the day before, and it pushed up nicely and I closed like 2/3 there. So is this a lower high? A higher low, sorry. So it's still yet to confirm. But what is pivotal for me right now is to get back within last week's range. So last week's low was Friday's low. So we broke below Friday's low. That's fine. We got back above it. So any deviation below Friday's low now or last week's low, let me just make sure I'm correct. Yep. I want it to be short-lived. Okay. So as long as this low holds, I'm still bullish. Now, how do I confirm? Okay.
Back over that.
Or increase the probability? Well, basically, if it gets back above, so for example, say if this is the consolidation that took it below here, so if we get a move below, back above here, then I believe that we probably have the low of the day in, and based on the higher time frame, we probably have a higher low as well. So lower time frame for a tighter stop, and then like that, I'd be probably going for back to that blue line. Because I've got to be realistic. I'm not going to aim for the moon unless it clearly breaks that blue line. If it does clear that blue line, then that maybe that short-term day trade can evolve into a swing trade.
A move to 3,000. Let me ask you this, Aiden. I've seen your levels are excellent. Do you teach at all? Do you pay it forward and teach people? Because, you know, it's one thing to see you and your levels. How would you advise people to find them on their own?
It's just practice. So what I do usually with my group is I trade live with them and they watch me trade live. And I think I don't treat directly, oh, this is a curriculum, this, that. I don't think that works. That didn't work for me when I was doing it. But what I do is show it live in real time. So as I'm trading, okay, I'm watching this just like I'm doing now. I've got that level, I've got that level. And imagine this is an example of how I trade live with the guys. Is I said, okay, if this happens, then I do this, and I've already explained we got this level there, why is that important, why is that important, and then I go back historically. There's a reason behind it, because this is how prices behaved around it.
So they're just going to have to do the work and look to their left and find key levels and then see what works and learn over time with practice and experience, screen time mainly, of identifying pivot points like you do.
Yeah, I mean that's what worked for me personally. So if I go over something with someone, I just do it on the basis of what works for me, and this I found most effective. I mean, there's loads of like courses out there reading, but I think it's different putting into real-time practice.
I love the simplicity of your method. It's powerful. You know, simple doesn't mean that it's not powerful. So, are these things you learned from Michael, or have you tweaked them and developed your own style?
I've learned from Michael, I've learned from Chris Laurie, I've learned from WMD, and I've just, I've Tom Dante, Steve Paraker. So I've brought all of them together.
How about that Pinkert guy?
He's next on my list, so he's icing on the cake.
All right, buddy.
So another thing I like about this is, okay, if I'm looking at a level, right, I want to see, has it been responsive before? So if I look at this right now, that's been the high of the week for the SPX. That is the low of the week. If I draw a line across there, so get rid of this, just to see, so it's not just, oh, it's this, it's that. It's got to, has market, how's market behavior around it previously? This just so happens to be midpoint for the week, okay, 50% there. It's close enough to Friday's low. Now, Friday's low wicked it. I mean, I know it's a 30-minute chart, but you can see the price behavior there, some big reaction there. Now, honing in on price action. See this there? Spikes it, pushes back up. As soon as it makes a clean break, it pushes lower. Resistance there. As soon as it makes a clean break, higher. Again, same here. So I know this would stand out to me intra-week. Why? First and foremost, for now, it's the midpoint intra-week. It's the mean level that keeps returning to If you look at it, there,
28,
back
28,
there,
29.
there. So every time it deviates away from it,
Yeah.
so what I try to do, I build a picture for myself. So okay, I've identified that this is the mid level. At the same time, from what I've explained from the higher time frame perspective, or on the daily anyway, that we're at that daily level as well. So then you can bring in the simple chart patterns and even moving averages. Okay, we're getting low, and then is this a high low? Who knows? But from what I've just explained so far, if every time we get back above the mid range, that tells us that okay, we're pushing higher. So at this point, where would be the next objective? Here, still aiming for that. But at the same time, we're carving out a higher low. So I bring in the higher time frame and then try to bring in a lower time frame entry with it. So with this, instead of a day trade and having my risk there and short-term targets, because of the higher time frame suggesting to me higher prices, I can run that level up. And as long as we stay above the mid-range, then the longs are good. As if it makes a clean break below the mid-range, I cut the position.
Beautiful.
And then wait for the next setup. Or I can still hold it if I still got a high time frame bias here. But if I'm micromanaging it, or like, if I'm able to sit at the desk, yeah, I'm happy to cut the position. Wait till the odds increase in my favor. When do the odds increase? If it's above the mid range.
All right, so
for example,
that's a great segue. A great segue. When after you have a position and you've gone to lower time frames to pinpoint and have a more precise entry, do you manage your positions from a higher time frame so you're not paying attention to all the wiggles? Because it's great to make a great call, it's great to make a great trade, but the toughest thing is to have a great hold. So what do you do? So how do you do that?
See, there's no easy way of doing it. I mean, so what I tend to do, I have if I'm confident it's gonna be a big swing trade, I have a swing account and I don't touch it. If it hits, unless I get a clear invalidation level in the sense where I can trail my stop or something big fundamentally comes out where it's obvious it's going to crash, I'll interfere with it. But other than that, I'll leave it alone. I'll let it do its thing, and in the long run, it works. But short-term trading, I'm always messing about with that, managing it. I'm always managing that. So that's SPX. Or another one is dollar yen, and why I'm still bullish the dollar yen, but it's at a point where I may have to switch things around. So if I go to dollar yen, where's my dollar yen gone?
I was thinking about 108.20. Let's see if you have anything around there.
For me, if it's gonna be the low's gonna be in now, and I'll tell you why.
Okay.
Yes, for me. Otherwise, if it breaks this thick black level here I've got, then it's game over in my opinion. Well, then it goes lower. But the reason why I say that is similar thing again. And what I like about this is it's lining up similar with the S&P. But if I look, we got that level there, that high there. I can break it down deeper, but 1 second. Yeah, okay. Yeah. So we got that level there, that high comes above it. Okay, normally we expect traditional support and resistance. What does it teach us? It tells us that if you got level there, resistance should become support perfectly. It doesn't always work like that.
No, it
hardly
doesn't.
Ever does. I mean, be lucky to for it.
Mr. Market is mean.
So what I see in this is the way I'm interpreting it is okay. It doesn't quite touch it there, but okay, close enough. It deviates it there. Every time I get a deviation and then it snaps back above that level, that's a strong sign. Okay, rejection. So it's nothing, new there. Now look what it's done. It's come right back down to that level. Now in this case, we've got two levels I'm watching. One, that main level, and then one, this level here. Now the clear-cut play for me would be, okay, wait for a daily close back above that. As soon as it does a daily close back above it, just like this daily candle did, then it should be ready to expand. That's one way. If I'm short-term trading and looking for a bottom, I'm going to get in before that, because
does the gap mean anything to you that we left last week?
I mean, gaps can be filled in later on. I mean, I think everybody thinks they're going to be filling straight away, but we've got gaps in here.
Sometimes they're not. Yeah, until you're broke.
Yeah. So market will fill in gaps whenever it wants to. I mean, when I first started, I used to think always things can get filled in straight away. Now, I mean, I don't even think twice about it. I mean, it'll fill it in when it's ready.
Yeah, there's different kind of gaps. There's breakaway gaps, which means the market's breaking away, which, if we take out your support level, that's what that gap is going to turn into.
Yeah, absolutely. So in this case, okay, there's a gap there, but it doesn't necessarily have to fill it. So I've got a clear level here now. So why am I long? So I'm already long this, and I've got my stop loss there.
Okay.
So I've gotten more aggressive because that's when I believe I'm wrong. And if it breaks this and it makes a daily close below here, then that means any retest back there, I'm probably looking for shorts to take out these and take out these. So for me, it's a make or break. So on the lower time frame, now, if I go in, why did I take the long? I took the long yesterday. I thought we were going to get a run yesterday. The reason why behind that was because if I look at the midpoint of yesterday's range, we came right there and then we pushed up. So I took a long around here. Or here, I can't remember, but I know I'm completely wrong there. So I thought just in case he runs without me, that's the plan. But as long as my stop still holds, I think it's a valid long. So if I was to wait and say if I wasn't in this again, how would I get on board this? Well, I'll do the same thing I did with the S&P from high of the week to the low of the week. That's that mid-range, and it's acting as a pivotal level. When it came there, it consolidated, pushed up, support, breakdown, resistance. Again, I use them both together as confluence. I don't often take them both at the same time. But if this was to do this,
midpoint of the week, midpoint of the month, midpoint of the day, very important in your work.
yeah, I mean, it doesn't necessarily have to be a midpoint. I mean, I get a midpoint, but then sometimes you get a deviation of a bit. So I look at a pivotal level. Where is it? If I go to a level above it, what's the reaction above it? What's the reaction below it? Clearly, you can see as soon as it cleared that consolidation, big reaction. Support, clean break below it, sell off. So if it does do that, that would be my confirmation that it gets back above the midpoint. And it's proven historically that if I look at price, is a key pivotal area. So this would be more of a confirmation for me, and then at that point my risk would be there. That's if I was already in the position. So if I do get stopped out now, if this unfolds like this, I've got a clear plan to re-enter the market. Then I know where the targets are. Nice stops resting there and a gap fill.
Beautiful. Okay.
That's if that happens. But yeah, probably get stopped out by this session. So yeah, that's that. Is there any other pairs? I mean, this week you want me to go through? I mean, I've only been focused on S&P and dollar yen really.
Okay, that's fine. Any view on what's happening in oil? Maybe one more. Like go with what's happening with WTI here.
Okay, oil. I am bullish oil. But I just don't like the price action. So I use the similar concept here again. So last week I was long oil and it hit my target.
Yeah.
There. So same thing again. So if we look on the higher time frame, okay. If I look at this chart, okay, if I look at this, right, yeah, it's coming to key support here, which is obviously this consolidation that pushed the market up. Okay, that's fine. We've had that initial reaction last week, so that was low of last week, and then it rallied up. Okay, so we've been trading within this leg. It's just been consolidated. It's been such a mess. So the clear cut play. So for me, I have a clear plan. Okay, if I want to long this and don't want to bother with this, how would I get on board? Well, this level is key pivotal here. Why? It's proven because it deviated there. If it was to make a clean smash above that and hold above that, so then my higher time frame bias lines up where it's come to the higher time frame level. It's starting to break up consolidation, breakout, typical. So at that point, I think it's ready to push up. Okay. Now, short term, what do I do with this? Again, what I'll do is I'll go down to the lower time frame and I'll do the same thing. So yeah, last week I posted a chart and that was low of the week and that was the high. Well, that was the range we were capped within. And look at the midpoint was very pivotal.
Yeah.
So again, I'm not comfortable with these lows here, but for me, short term, as long as this low holds, we should be okay. The only other reason I'll be okay with it is if it swing fails and then rejects. But I think oil is bullish, but I just don't want. I tried to get on board yesterday, so I got on board yesterday again. I'm probably going to wait for a clean breakout of this range before I step in. And if this is a clean breakout, then it's going to be really nice. And
if
the reason
you get
why
that clean breakout, you think you're going? Where do you think we could go to? Like new highs, like 68 or something?
I'm going for 68, 80. I think these highs here. I think I've got 68, 80. And if you look, I mean, each market for me, I mean, has certain nuances. Oil is really great for breakout trading. I mean, I'll just show you an example of what I mean by that. And just on the daily chart, so I mean, this is my swing account. This is all I do for oil. So if we look right now, so we've got a range here.
Right.
A range there. Daily close above. I mean, it's not drawn it trends. Again, consolidation, daily close above, it trends. You look back historically and you just look at that simple pattern. Anytime it has a range and there's a daily close, and especially if you're in sync with it, it just goes. So I have a daily strategy where I just enter on the close of that, stop loss there and let it ride. And it's just
Okay.
works here. I know it's a trending market, so the condition has to be trending for it, obviously. But if you identify it's a trending market, it works really nicely with oil. But yeah, that's one of my little oil strategies.
All right. Well, you know, Saeed, you gave us a lot of pearls, enough to string a necklace in 20 minutes. So record time with great content, and thank you for edifying our community. Unless you want to go somewhere else, you know, a great job is what I'm saying in record time. You have the new record in giving us the most amount of trading ideas in the shortest amount of time.
I think anyone watching the replay probably has to play like slow play, half the speed to understand me.
Yeah. Anyway, I'm so glad we met on Twitter and that you become a regular now on Face. I
been
really
on a few times, haven't I? Yeah.
Yeah, I respect your work, Saeed, and
I appreciate that.
Proud to call you my trading warrior brother. So the best way for people to follow you and watch you trade would be how?
I mean, if you don't mind the foul language, then my Twitter trader one is it. That's about it, really.
Yeah, so the best way is through Twitter at your handle.
That's it. Yeah,
okay.
That's it.
All right. Well, Saeed, I hope pips rain down on you the rest of the week and going forward, and look forward to having you back sometime this summer. Okay, buddy?
Thank you very much for having me. Have a great day.
All right. Everyone, that's Saeed Zaman at Trader 1SC. That's a wrap for today. Good hunting, and remember, don't just count your pips, count your blessings. You're welcome, Hammett. You're welcome, Jeff, Chad. Thank you, Blake and Stell and Steve. I think we put on a good shoe today. So shoe is how Ed Sullivan used to pronounce it. We're going to have a really good shoe. I am, Jeff, and you're one of them, bro. All right, everyone. Good hunting. Go join. You're welcome, Teresa. Go join Blake and the guys in the chat room, and see everyone tomorrow. Investing.com Thursday. Adios.